To the Wall Street Journal's James Freeman. We got, excuse me, Swann Street Strategies partner Erin, McPike, and Daily Caller editorial director Vince Coglianese. Vince, what do you make of that first on the Saudi thing, if you'll indulge me, and not being privy or not having seen this alleged tape the Turks insist shows video and has audio of Khashoggi getting interrogated and then killed?
Well, I think the president throughout this process has been both reserving judgment and showing a clear interest in getting to the bottom of what actually happened. The clearest signal of that was sending the Secretary of State overseas to begin having these conversations to figure out what indeed happened. If I'm reading into the president's response throughout this, which I am, I think the theory here is he's trying to think clearly what is in America's best interest. If at the end of this we find out that this columnist was indeed killed by the Saudis in Istanbul, the president has to make a decision. What is the response to it? How does he sanction Saudi Arabia, if at all? And how does that serve American interests? Because at the core of every decision the president has seemed to have made throughout his administration has always been that one thesis. How does this serve America? And I think that's the thing that's animated his responses throughout all of it.
Yeah, he has also said, James Freeman, that be careful what you wish for. If you're going to punish the Saudis for an act, I guess he's saying, for which I still have no proof if he hasn't gotten any of this Turkish video and audio tape. And by the way, we're told the Saudis have not been provided that as well. So we're trusting that the Turks have this. They've just not shared it with anybody, so we'll see. But what the president is saying is even if it does, show what some say it will, it's not enough to cancel a $110 billion defense contract, not enough to jeopardize our overall relations. How is that going to go down? Because a lot of his Republican senators saying, yeah, it is worth reassessing things.
Yeah, I think he's making a fair point that it's premature to say what the sanction should be before we figure out who did what to whom and when and so forth. But this argument, if it's that we're not going to respond because they buy a lot of our weapons, I don't think that's the best argument. I think probably a better argument for the president is this is a rough neighborhood in the Middle East with very few democracies. We end up doing business with people, as we do in other parts of the world, who are not like us, who don't have our democratic tradition. And where do you strike that balance? And it's particularly interesting in the Saudi case because we've seen encouraging signs of more openness and a crown prince who wants the Saudi Arabia to be a more modern society. But then a story like this, obviously, going completely the other way. So once we know what happened, I don't think it's going to be compelling to say we overlook things when people buy lots of our weapons.
Yeah, I'm glad you mentioned this. Well, I don't know what's the true case here, what happened to this columnist, but if everyone gloms on to the same sort of argument presented by the Turks, no fans of the Saudis, just be very, very careful here. Let's verify that this type of data and proof exists, video, audio, otherwise. So that's, I think, what the White House is saying, what some market pros are saying. Guys, I also want to address some other news here that, once again, the president has been, jawboning about the Federal Reserve. Before talking to Stuart Varney, he made very, very clear with Trish Regan that he is not keen on how aggressive the Federal Reserve has been. And Larry Kudlow sort of doubled up on that. I want you to listen to this.
My biggest threat is the Fed, because the Fed is raising rates too fast, and it's independent, so I don't speak to him, but I'm not happy with what he's doing because it's going too fast, because you looked at the last inflation numbers, they're very low.
And he knows a lot about interest rates, and he's issuing a warning. Now, let me add to that. As he himself said, actually yesterday, I believe, on Fox Business, he said he is not interfering with their independence. He is not going over there to tell them to change their plans or their strategy. He's giving his view.
What do you think of that, Erin? He's giving his view. He's not interfering. When he's giving his view, sure, that is interfering, isn't it?
Well, he gives his view on a lot of things. I mean, I don't really believe that the Federal Reserve will be deterred by what President Trump says. He spouts off on all kinds of things. Is it a good policy for him to be continuing to spout off? No, but it's something that President Trump has been doing. It's not the first time, and he has certainly complained about the Fed in the past. He's been admonished by other leaders in recent past about this. But again, I don't think they'll be deterred by anything he says.
Yeah, well, you might be right on that. You know, Vince, this issue of taking on the Federal Reserve might have more immediate financial importance to the markets than almost anything else. And I'm including Saudi Arabia. I'm including now what seem to be stalled talks with the Chinese. The reason why I raise it is that Martin Feldstein, the former economic advisor, was on with Maria Bartiromo today and said there are trigger points at which the markets can no longer ignore rates going up. I want you to respond to this.
At what point does the yield on the 10-year become a real problem?
It becomes a real problem when it gets to 4+ or 5, and I think that'll happen. Right now, it's a little over 3. It's doubled in the last 2 years. And it's moving up.
In other words, that would be the next psychological level. What do you make of that?
Yeah, I mean, rate hikes last week spooked the markets to begin with, so I think it's pretty wise to think that the markets are going to be spooked in general by the rates being driven up by the Fed. And it's not hard to see why the president is upset with this, because big announcement this morning, the Office of Management and Budget announcing that they cut regulations and save the economy $23 billion. They're proud of that. They're also proud of tax cuts and putting more money in people's paychecks. But if you raise rates, ultimately what ends up happening is consumers ended up absorbing that. That means the cost to borrow money for the average consumer on their credit card or wherever they do it is going to be a lot more expensive, erasing all of the gains that the president has worked so hard to make sure American consumers have. I can see why he's upset about this. This makes a lot of sense, especially in an environment with inflation being as low as it is. The only way you really drive up inflation is pumping more money into the economy. The Fed controls that. Yes, they're not doing that right now.
All right, James Freeman, real quickly, I mean, we're going to get a sense of the Fed's thinking, at least at the late September meeting at 2 p.m. Eastern time today or thereabouts. That was another quarter-point hike. They telegraphed after that more were coming. Do you think as many are coming now? Because that was before, last week's big hit.
That's right. This reading is going to be from before the volatility. We don't know if they've changed their minds. People are looking at how much they see hiking into the future. I think these recent rate hikes, getting back to what you might call normal interest rates, are very heavy. Are healthy, I should say. And you talk about the impact on consumers. You have to also remember it's about time after the last decade for savers to get compensated.
That's a good point.
When people rent their money. So this is very healthy, and as Martin Feldstein was saying on Maria, the current level of rates is not incompatible. As you get higher, yes, it does become a challenge. And also, I think the president is mindful of the spending issue. If we go to 4 or 5% rate on the 10-year, it becomes very difficult to finance this $21 trillion of debt.
He better mean what he says, Erin. I mean, Republicans are in charge of partly the fiscal hawks and all this. They've been anything but. So what happens here?
It's a great question, but, look, Neil, I think we're going to see a very different economic picture in 2019 anyway. We've been warned again and again that some recession at some point is coming, despite the fact that the United States was just named the most competitive economy in the world again. But, I just got my Economist last night, and the cover of it is the recession coming in 2019. So
all right, then it's not coming. Then it is not. It is not.
Now
coming.
I feel better.
James Freeman writes an article like that. You can bet money on it. The Economist. I have many an Economist cover story to that effect, that you zig while they zag or whatever. No offense to that fine publication, guys. I want to seriously. I joke, but actually I don't. It was very good having all of you.